Welcome to Supreme Traders, taking your trading skills to higher levels.
Welcome back to another video. So basically, if you haven't subscribed, do so, then click the notification bell so that you receive all the videos whenever we upload. So starting with this video, we are going to be explaining about the supply and demand system first. Then after explaining about the supply and demand system, we are going to head on our analysis. As you can see, guys, the supply and demand system basically represents areas of reversal in the market. As you can see here, the system is completely free. If you haven't received the system, go to our Telegram channel, completely free, 100% free. So here we've got our red zone and our green zone. Our red zone representing the what? The supply zone. Then our green zone representing the demand zone, as you can see. And as I have told you guys before, you always buy whenever price is in that green zone, that demand zone, and you always sell whenever price is in that what? In that red zone, which is the what? Which is the supply zone. So this one is the supply zone here. We always sell whenever price is in the supply zone, and we've got our what? We've got our demand zone in this what? In this green zone here. And we'll always what? We always sell whenever price is in the supply, which is the red zone, and we always what? Buy whenever price is in the what? Green zone. So coming to V25, we were from the daily time frame, and we saw that the price was playing around in this what? In this demand zone here. Therefore, we were looking for buying opportunities for swing trade. To go to what? To analyze on the, we use the trading view for analysis. So coming back from the MT5 here, guys, you can basically see this was our what? Our supply and demand system. As I told you, this is completely free. You have to receive it for free on our Telegram channel, completely free, 100%. So going on to our trading view for analysis, here's our trading view. We will analyze volatility 25, how we took the buy entries and made growth profits. So as you can see here, we're on the daily time frame on what? On volatility 5. Whenever we're analyzing for swings, we start from the high time frames, which is the daily time frame. So coming on to volatility 25 here, guys, we need to draw our first major trend line that I spotted, guys, as you can see here. So coming on to the index here, guys, to the index, you can basically see there were these points as the market was in a downtrend here, guys. So previously the market was what? Was in a downtrend, as you can see here. This was the downtrend, guys, as you can see, and there was this extension here. Therefore, whenever I say that the market is in a downtrend, we're expecting an exhaustion as the market reaches the lowest points. So the market reaches its lowest points here, as you can see here, where the market reached its lowest point. Then it started showing some signs of exhaustion at this level here, as you can see here. So whenever we see some sign of exhaustion in the market, you know that the sellers are what? Are losing momentum, and you have to what? To look for analysis or a setup that what? That are tells are for buys, as you can see. So coming our setup here, as the market was in a downtrend, there was this highest point here and the other point here. These were basically what? Lower highs. We just have to connect these lower highs to form what you call what you call a resistance trend line in the downtrend line. So let me do that, guys. As you can see here, guys, we have basically drawn what? The trend line that is being represented by what? By the lower highs, as you can see. So basically this was our main trend line, and it was also our confirmation trend line. Why did it call it our confirmation trend line? As I told you before, whenever a trend line touches at least what? At least 3 points or above, we call it a confirmation trend line. Then if it touches 2 points, it's a tentative trend line. So this one was touching exactly 3 points, so we call it a confirmation trend line. So this was our major confirmation trend line, as you can see here, guys. So we were basically looking for what? For buying opportunities. So what happened here, guys, is that our price was playing around in this zone. As you can see, this is a channel here, guys. We can call it our field, our playing field, as you can see here. As you can see, price was playing around this zone here, which was our channel here. Then later what happened is that it showed some exhaustion here, and basically what? Made in what? And confirmation to that by breaking this trend line, which was also corresponding to the what? To the previous resistance zone, as you can see here. Therefore, when price broke this zone here, we took our first buys, and that was basically I did but one, as you can see here, guys, as you can see. So basically price broke this level here, and obviously we're waiting for a retest to the what? To the major trend line. Obviously for breakouts we trade what? We trade retest, as you can see. So we have to wait for this retest to the what? To the major trend line. But there's something that happened, guys. as we were expecting that whenever price was going to reach this zone here, this retest, price was supposed to bump all the way all the way up here like this here, but it didn't do so. What happened here is that the price started ranging at this zone here. As you can see, price started ranging at this zone here, guys. It started ranging at this zone, and as we told you before that we never trade whenever the price is ranging. So as you can see, price was ranging in this zone here. Let's highlight again the range. As you can see, price was ranging in this zone here, and there was no clear breakout to that range, as you can see, so we could not take any trades. Then later what happened is that the sellers engaged again. They stepped in onto the market, as you can see here. The sellers stepped in onto the market and they pushed the market further downwards here, forming another bottom, which formed a double bottom to the previous structure. As you can see, if we are to extend this one here onto this one, you can basically see the double bottom. So after we noticed the double bottom from the daily time frame, our swing was confirmed, and the next thing that we had to do is to go to the 1 hour time frame, which is the lower time frame. As you can see, let me erase all the drawing too so that we can basically see everything clear. So to go to the 1 hour time frame, after we noticed the double bottom from the daily time frame, which is a great confirmation for swing, and as you can see. So coming on to the 1 hour time frame, as you can see here, this was our chart here, basically our pure chart without anything else. So what I had to do is to spot for any patterns or any structures that were forming in the market, and the first thing that I saw was a double bottom. As you can see here, we've got our double bottom at the slowest point here. Then after noticing this double bottom, of course I have to find the neckline, and of course I told you the neckline, we just have to connect it between the points of these double bottoms where they intersected the highest point, as you can see, which is this point here, just like this. I can highlight it like this. It's basically simple here, the midpoint of these double bottoms here, just like this here. So as you can see, I'm going to spot the midpoint, and here is the midpoint for our double bottoms, just like this here. We've got our midpoint here, and the next thing that I have to do, I have to draw a horizontal ray that is corresponding to that point, and that is going to representing our neckline, or we can just draw a minor trend line. So let me draw a certain thing that I'm going to draw here, guys, basically representing basically representing the neckline here. So we've got our double bottom here, as you can see, guys. We've got our double bottom at this one here. Then the next thing that I'm going to do is to draw the neckline to the double bottom. And as you can see here, I'm going to include this wicks here, guys. Whenever you are analyzing, guys, you have to include the wicks, because the wicks, they basically show areas where price is previously attacked and has got possibilities of attacking that zone again. So here I had to stretch this line from this zone to this zone, as you can see here. So this line was representing my neckline, as you can see. And trading for double bottoms, as we told you, we have to wait for the breakout of the neckline. Then after the breakout of the neckline, we have to wait for a retest, then take our trade. So as you can see here, price here did all the way up here. We had analyzed the first from the daily time frame. This was now on the 1 hour time frame. So what happened is that the price came all the way up and it broke this neckline, and after price broke the neckline, it came to retest. Then after this retest, of course you have to end our trade, because the price is retested the neckline, as you can see. But of course you also need a double confirmation for that entry. Therefore we will always apply the Fibonacci retracement ratios. As I told you before, that these Fib retracement ratios, they always show levels of retracements. So as you can see here, and when always we are dealing with the Fib retracements, I told you that we always find our major impulsive move, our major last impulsive move. Of course, this was the impulsive move. This is a great move that happens within a short period of time due to great volatility in the market. So as you can see, this was our last impulsive move. As you can see here, our impulsive move. Therefore, when drawing when attaching the Fib retracement ratios, we just connect the highest point of the impulsive move to the lowest point of the impulsive move. So let me do it like this here. I touch the highest point of my impulsive move, just like this here. Then I stretch it to the lowest point of the of that structure, which was this double bottom, as you can see here. So I've done that, guys. I've done that. The next thing, always when you are dealing with Fib retracement ratios, we have to search for the golden ratio. And what is the golden ratio? The golden ratio is level 0,618. and this was our golden ratio here. Let me just draw a rectangle corresponding to that golden ratio here. As you can see, this was our golden ratio here. And what does the golden ratio basically represent? It just represents a retracement of 40%, of 39 to 40% from the previous impulsive move. So basically, after this retracement here, we expect the market to continue in the current trend. So as you can see here, price came and bounced at this golden ratio here, which is the level 0.618, as you can see. And also the other thing is that was a trade, a neckline. That was our previous neckline, as you can see here. So price came and respected the golden ratio and also respecting the neckline, and we saw some sort of rejection at this point here. As you can see here, there were some reversal candles at this zone here. Therefore, they forced us to make an entry. As you can see here, if we are to highlight this one here, you can basically see some reversal candles, and it's also a point of the neckline. Therefore, we have to take our trade at this one, as you can see. So we took our trade here, this one here. That is where we took our first trade, guys, at this one here. And our stop loss was tight just below that neckline, but the take profit all the way up. Therefore, that was a good risk to reward ratio. As you can see, guys, here we have to put our stop loss just tight below that neckline, just like this here, guys, as you can see. So this was our previous setup, as you can see, and we won this buy trade, as you can see. But the next thing that people were seeing is pattern within pattern. We're not talking about pattern within pattern. This is where we see more than 3 patterns or more than 4 patterns or more than 2 patterns. So basically, let me show you something, guys, that you were not seeing, guys. As you can see, on this certain market here, guys, we had something that was simple. Let me erase this thing here. We had something that was simple. So after we took our entry, of course, our first take profit zone was the first resistance level, of course. Just like this here, this was our first take profit zone, as you can see. This was our first take profit zone after we took the entry from the bounce at the neckline, and also at this golden ratio, guys, as you can see. So this was our neckline here, and the bounce at this neckline or golden ratio also, which was this one, the golden ratio, bounce at this level here. We took our buy entry, and of course our first TP zone was this zone here. This was our first TP zone, but of course, in our trades, we don't take profits whenever we are taking a swing. We just leave the trade like that. So what happened, guys, as you can see here, if we were to draw another line, guys, just like this here, another trend line here, let me put another color, maybe black, another black color, so that you can basically see what is happening here. As you can see here, now we have formed what you call an ascending triangle. That is what we now call pattern within pattern, because we are seeing a lot of patterns within the same structure. As you can see here, we've got our ascending triangle here, guys. So we were in a swing trade, we took our buy entries here, and we were supposed to close the trades here, but after noticing this ascending triangle here, we know the trade was going to continue all the way up, as you can see here. So I had to take more entries at this one here, as you can see here, and of course I would log the profits just below that zone. And take profit just at the nearer ratio, as you can see here. Of course, our nearest ratio was this one, which is here. Let me draw a horizontal ray that is corresponding to the nearest ratio, which is this one here. As you can see, this was my first take profit zone, according to the end of the ascending triangles. Of course, we took some entries here, we took some first entries here. That is why we are calling it a swing, and we are holding those entries. We took some first entries at this zone here. Then of course we took the other entries just after the break of the ascending triangle here. So after the break of the ascending triangle, the market had to move all the way up, as you can see here, and it had to break this retracement ratio. And as you always hear from the name, retracement ratio, therefore the market must always come and bounce at that retracement ratio in form of a pullback, then continue all the way up, as you can see here. So this one is a continuation strategy. We've got a lot of different strategies. Don't forget to like, subscribe, and share, and click the notification bell so that you don't miss all the upcoming videos. So as you can see here, guys, I'm going to highlight something that was good, something that was happening. As you can see here, we're expecting the market to come and what? To come and retest what? Retest this one here. Let me do this here. As you can see here, I need to highlight it clearly, guys. So just like this here, guys, you're expecting the market to come and what? And retest this what? The retracement ratio, then continue again all the way what? All the way up to the next what? To the next fib retracement ratio, as you can see here. Then on the next fib retracement ratio, we don't know what is going to happen. Either the market is going to break again, or the market is just going to bounce in the return to the what? To the previous trend, as you can see here. So expecting the market to come and go all the way up to this what? Up to this zone here. This is what you're expecting. So we took the trade and we are still in the volatility 25 trade, guys. You can hold that trade, as you can see. So this is basically how we make our analysis. This was a simple analysis on the volatility 25. We have got a lot of different strategies that we apply on the market, and you can always click the notification bell so that whenever we post a strategy or any video of our systems, you can always get what? Stay updated, as you can see, guys. So basically here we are dealing with what? With the V25, and I've explained every setup on what? On the V25. And there was something that was simple, guys, something that was simple. You could always apply a trend line to this what? To start here, as you can see here. As you can see, you could always apply your trend line also, that after the break of this trend line here, there was the break of the what? Of the neckline, just to what? To add your confirmations to your what? To your entries, as you can see, guys. So this was our setup for what? For volatility 25 using pure price action, as you can see. And coming back again onto our what? Onto our MT5 guys, as I told you, this is our system. It's basically simple to install, guys. If you don't have the system, come to our WhatsApp or our Telegram channel group. You just get it completely for free, 100% free, guys, completely for free. So as you can see, this system is good in a way that it always shows you what? Areas of what? Areas of supply, whereby they are represented by this green what? By this red zone here. Then areas of demand, whereby they are represented by what? By this green zone. And whenever price is in the what? Whenever price is in the demand zone, we look for buys. And whenever price is in the what? And whenever price is in the supply zone, we always look for sellers. So this is our system, guys, and we have done the analysis on what? On V25. Always click the notification bell, guys, so that you always stay updated on the upcoming videos. Thank you, guys, and don't forget to join our Zoom sessions every Friday.